There's many things. There's many other metrics. Here's one. PUL multiple. This measures how rich the miners are and whether or not they're going to dump. So this measures if the miners have just made so much money that they need to just sell off some of it to make sure that they're, they lock in their profits and they're not going to go through any catastrophic event if Bitcoin dips. And you can see how in 2013 it shot up. That red zone is usually when they're too rich or when they're about to sell off. And you can see in the red zone in 2013, that's when Bitcoin actually started coming down. And you can see in 2017, also when Bitcoin hit that level, or sorry, this multiple hit that level, again, that's when Bitcoin found a peak and came down. And you can see we have not come anywhere close to that. Not when Bitcoin first went to 64,000, and especially not right now. But it's also not in the green level, because the green level is indicating a bottom, like after a black swan event, kind of one of those situations. And we're not there either. So we're kind of roughly right in the middle. And if you think about that, that's fantastic. That's fantastic. That means we still have a lot of room to grow. A lot of room to grow, and we're still hovering around $47,000, $48,000. So think about that. So this is another indicator that shows that Bitcoin is not at top, and it's a good buying opportunity. And here's another one, is the HODL ratio. This measures new coins versus old coins, and there's a very complex algorithm that's being used. And again, if you look at it, it's pretty darn accurate. In 2013, you notice that it shot up to this red zone, and that's when retail money, the new coins, is outstripping the old coins, meaning that too many retail investors have FOMO'd in, and usually when that happens, well, that's usually a top indicator. And it happened again in 2017, right? It happened again, yeah, that's 2017. And since then, right, you can see that we're nowhere close. We're somewhere in the middle. Again, another indicator that shows that the market is not over FOMO'd, I guess, right now, not overhyped. It's right in the middle, and that is why the run will continue, right? So these are all indications that Bitcoin has not formed the top. Here's another one. I've never heard of this one. Investor cap multiple, which subtracts thermal cap from overall Bitcoin cost basis to assess fair value of Bitcoin. And again, using this model, you can see when Bitcoin is overbought or when it's oversold. And right now, it's kind of in the middle, but more towards the oversold side. And if you look at the purple lines, that's an indication of when Bitcoin actually started really rallying. Back in 2013 and 2017, and we are at that same point. So, another buy signal, right? So there's just a lot of buy signals going on right now. So again, I know, some people, I'm reading chats and comments, there's some people that's just so negative about what's going on right now. When you think about it, Bitcoin has gone up about 70% year to date. It's going in the right direction. The fundamentals and adoption couldn't be better at this point. Yet people are still fearful about Bitcoin's future. It doesn't make a whole lot of sense. Now, here's something that is also very positive, projecting out this new lengthening cycle. You could see that Bitcoin, after the first halving event, right, took about a year to reach its top. The second halving event, which was back in 2017, took about a year and a half. So this time around, it could be 2 years, and you could see that if it does, it's still heading to somewhere between $200,000 and $300,000, and that could be coming mid of 2022. So there you go. There you go. And what else is there? Well, shorter term tech dev is looking at what happened in 2020, specifically, well, of course, with Bitcoin, but in 2021 too. These two patterns are very, very similar, although they're different time frames and different months, but the pattern is very similar. And he's looking at whether or not we're going to see that same kind of breakout that we had in 2020 with Bitcoin. And it makes sense with everything
Oh,
else
you okay?
that I just showed you guys. The buy signals and all the metrics that show that Bitcoin is nowhere near the top. So this definitely could be coming, right? So this is why I remain bullish, because of everything that I'm seeing and everything I'm showing you guys, and I will remain bullish pretty much forever unless there is something that tells me otherwise. But right now the metrics are all indicating we did not form a top at 69,000. And of course I talked about adoption, awareness, and everything else going on. I mean, it's just fantastic. It's fantastic to be in crypto, fantastic to be a holder, but it's more fantastic when you can buy things at a discount, like right now with Bitcoin and right now with altcoins, right? All right, now where else? Just a couple other things. I wanted to share this Friday. There is a enormous 6 billion options expiration, right? So this could be a turning point. This is the last one of this year, and it happens to be on the last day of this year, Friday the 31st. So this could be huge, right? And the max pain price is at 48,000, and I mentioned this yesterday. So that's kind of where we are now, right? So this could be a reason why Bitcoin is not recovering, and afterwards we could see a huge rally this coming weekend. We have seen this many times where after expirations, Bitcoin seems to have a ceiling lifted and it just starts pumping up again. So this could be right around the corner in coming this weekend. And also, lastly, I want to share this because Raul Paul was asked about why he thinks that we didn't have a tremendous run for Bitcoin this last week. And I've talked about tax loss harvesting, and he's kind of saying the same thing, except he's like, well, a lot of institutions that are trying to make their books look good, right? Kind of like with tax loss harvesting, and they also want to lock in their gains for this year, right? They probably were selling also. But here's the good news. According to them, or according to him, to quote, it looks like they're done because the market has been chopping around for the past week, which was the traditional last week of everyone squaring their books. So according to Raul Paul, he does believe that maybe the institutions had something to do with it, right? But now they're done. So this is also positive, because if they did sell off to offset the capital gains or to lock in their gains for the books, guess what they're going to do next? In January, they're going to buy back in, right? This is why January in 2022 could be even more tremendous than 2021. This is also good, right? So, a lot of good stuff, guys. A lot of good stuff to look forward to. So, this is why I tell you guys, stay in the game. You definitely want to stay in the game. You definitely want to take advantage, because it's still so early, right? All right, that's it. That's all I have to say. Besides that, if you look at CMC today, it's kind of mixed. So you have like Polygon, which I talked about, right? It's coming up 4%. That's pretty good. Big stuff going on with Polygon. Terra's in the green barely, but a lot of these others are down 1, 2, 3%. So it's kind of like an even day. But you do have some good movers. You go down the list. Mirror Protocol is doing pretty good, around 6% today. Phantom is up about 1%. Theta's up 3%. Right, so some of the ones that are oversold recently is starting to come back up a little bit. So that's always positive, but obviously there's still a lot of discounts to be had, so you can take advantage. All right, guys, now let's do some Q&A. Tai Su says, is that from Jordan's meme, strap on, we're going to the moon? I think he got that from me. I'm the only one that says strap on. But yeah. Alright, scrolling up. Let's see if I missed anything. Alright. love Plan B. Man, there's a lot of weak hands in this chat. Again, that's why I started the show. I'm like, how can people be this negative, this weak? How could there be so many paper hands when Bitcoin has done so well this year? Crypto has done so well this year, right? And it's not like Bitcoin is black down to like 30,000 or 20,000. That would be a different story. It's still holding very well. It's still holding above the recent low of 40,000, and of course above the low before that, 28,000. So, but I get it. I addressed this one time, right? I did a video. Someone says, well, you know, you talk about people that made a lot of money. What about people that bought at top, right? If you did buy at top, it's the same thing. The strategy's the same. If you can take advantage of the dip, you buy the dip and you cost average down, right? So you buy some of, let's say you bought Bitcoin at 69,000, now you buy a little bit at 47,000. Well, your cost average is, you know, somewhere in the 50s, right? So you don't even have to wait for Bitcoin to go back to 79,000. That's the beauty of buying the dip. Now, if your dollar cost average based on schedule, then you don't have to worry about up or down. I've shown you guys how powerful DCA is on a schedule over long periods of time, over a year, 2 years, 5 years. The gains is insane, right? Let's see. Where do you think Cardano is headed against ETH and its future? Do you think it could hit its all-time high? Yes. It's about halfway to its all-time high, but I continue to stand by Cardano because I made this mistake before. You don't want to sleep on Cardano. Sometimes it doesn't move and you just want to give up on it. But ask any Cardano long-term holder and they'll tell you the same thing. It was tough until it wasn't, and once it broke above 10 cents, it never looked back, and they're all multi-millionaires today. Alright. Let's see. Manny, appreciate it. Plan S, Plan F. I wonder why he called himself Plan B. Why not Plan A? Alright, what else is there? Thanks for the tip on coin tracking. Yeah, they are a partner, but you know what? Coin tracking available in 100 plus countries. If you are going to do your taxes, then you need a software like coin tracking where it just uses APIs, APIs, or imports, and it connects to all your wallets and everything. It's really, really, really useful for those of you guys that are doing your taxes. And also, you can take advantage of tax loss harvesting, and you need a software like that to help you with that. But, and the URL's in the description. All right, let's see. What else is there? Zach, Cardano is the truth. I have big hopes for Cardano. You guys know that. I think CADX is going to really, really change the game for them and really start a lot of, I guess, start up the ecosystem, right? So I'm looking forward to that. Tried watch selling Rune on Crypto.com. Couldn't because of low liquidity. Should I be concerned when I want to take profits? I don't get that. You're saying that you can't sell Rune on Crypto.com. That doesn't make a whole lot of sense. So, you know, watch trading or watch selling, basically you sell it, buy it back, right? Unless Crypto.com has such low liquidity, you couldn't sell, that doesn't make a whole lot of sense. So, Crypto.com, I think you need to do a little more research. What do you think about Elrond? As long as they keep building their ecosystem, they're fine. Their new DEX is out, their launchpad is out, right? They just have to keep building upon that. It's still early for them. They have a lot of bridges out there. I know they have NFT marketplaces, but in terms of DeFi, it's still very early. So, and that's a good thing. Kind of like a data. UFO Gaming. I looked into them. You know, still work in progress. Basically, we have to see how good it is once it's out. AMP. I think AMP will get better as retail gets stronger, but you know, right now retail is still kind of weak. So. Will you read the Reaper white paper? Maybe some point. I have no idea what project that is. January 1st, being a new fiscal year, institutions, whales, and retail should start buying crazy again. Now it's time to fill it back. I kind of agree with that. And that's what Raoul Paul just said. He believes that a lot of companies and institutions have bought, they want to lock in the gains to make their books look good so they can say, hey, in 2021, we made 100%, you know, or 1,000% or whatever. And they're selling off to lock in gains. And then, you know what, in 2021, January 1st comes, they will buy right back. The same thing with people that are trying to do tax loss harvesting, right? Selling off to offset the capital gains, and then they buy back, right? So, yeah, I think very possible. Very possible. Opinions on VBS, workingcrypto.com. It's the very first DEX on their new Chronos chain. I looked into it. Nothing really outstanding or crazy about it, but it will help Chronos. So it is the start of it. I don't hear a lot about Chronos. I mean, it's their new chain, but I don't hear a lot about it. It's still early, but I like Crypto.com regardless. If that chain blows up, it's gonna help them tremendously. But right now, I mean, just Crypto.com, just the name recognition alone makes them a really, really, really good one. How detrimental is Sol being very centralized to growth its ecosystem? It's not going to be detrimental to its ecosystem, but you know, the centralized part will turn off some people. But you know, having such a large amount of tokens locked up in the team is actually, it could be a good thing because that means that they're not selling, and that is why it's going up, right? Same thing with Near Protocol. Recently, Near has been doing a lot of games too, and I started paying more attention to them. They also have the same thing. They're kind of like a VC play, very well backed, but a large portion of Near is locked in with early investors and with the team, right? So in some ways, it does help because it makes it so that there's not a whole lot of floating coins out there. But then again, you know, when are the investors, the VCs, going to be taking profits, right? You just don't know. So it's good and it's bad. But as for the growth of the ecosystem, I don't think that has anything to do with it. It just depends on how well marketed they are, you know, the funds they have to attract them, you know, and of course the technology. Sia Coin, I'm just neutral on them. I like Arweave much better than Sia Coin. Noah, I bought 6K worth of BDC Matic, Helium Gala this morning. How do you feel about that group? I like it. That's a good group. That's a good group right there. Retail looking to get rich, don't care about centralization in the short term. Yes, that's true. That's actually true. I mean, most retail players, they can care less. I would argue 99% of retail could care less if something is centralized or not, right? But there is always going to be a group that cares, right? And if we truly want decentralization, you know, we have to support the projects that are more decentralized. But in the short term, you know, people just care about making money, so that's exactly true. GM tax loss harvesting video was very helpful. Thank you. You know, again, I'm not a tax advisor. I'm not a CPA, so you got to do your own research. Contact Coin Tracking or contact your local CPA. Different jurisdictions, different countries have different tax rules, but I know in the U.S. that is definitely something that's going on right now. So, and yesterday I was just on TikTok. I'm on TikTok a lot when I get bored. And I saw a girl that is posting crypto videos, and she reposted that video, and that was surprising. So, best sources to get crypto news. Well, that's easy. Just go head on over to cryptotrust.com, the best site for news. And hey, people asked me about Phantom. Well, right here, Phantom TVL balloons. Right? I got a whole team here, a large team that does nothing but scour Twitter and other publications and Google and basically all the latest news and guides and articles. Right? So, got a mining guide, you got NFTs right here, you got how to use exchanges, how to use QuickSwap, how to use Coinbase, how to use Phantom Wallet, right? And altcoins. Got many. What is Gala? Do you know about Gala? Do you know about Quant, Nervos? What about some newer ones, Saito or Zcash or DeFi Kingdoms? I mean, literally everything is on here. So all of you guys need to get on here every single day and check it out, because that's how you go educate yourself beyond just watching. You should do both. Watch me and go to the site. Reaper Financial, our white paper is two paper. We're very differentiated from everything else in the market. We'd love to see a live reaction to the concept found on the Reaper.io. I'm sorry, I'm not going to do that, but I appreciate it. And anyone else that's interested, go check it out, but I'm not going to check it out live right now. DJ says it's a brilliant site, I appreciate it. And I'm still growing the team. You guys know I had a video recently, adding more people to the team all the time to grow the site, to help me grow the channel, grow my Patreon, grow my newsletters, grow my teachable courses. I mean, I'm adding left and right here. Until the Lakers have a winning season, crypto.com will dump. Well, I don't think that's true, but it wouldn't hurt. If the Lakers is having a better season, it would definitely help them. But right now, the Lakers are playing like, I don't know, they're just playing really, really bad. Also, Westbrook, I don't know what's going on with them. There was actually a university that asked me if I wanted to teach a course. And I'm like, nah, not for me. Alright guys, I'll let you guys go. Overall, stay strong, stay positive, my friends. Right now, we're in this channel. Yes, I'll say we're in a slump, but we're in the same channel. We haven't formed any lower lows. We haven't done anything that we haven't seen before, right? So don't let the flutters and naysayers, the ones that are just feeling miserable, right, affect you, because you are on the right track. You are on track to attain financial freedom or life changing wealth. So you don't want to let anyone else deviate you from that path. And I've shown you guys so many things about fundamentals, about chain metrics, about TA, and about global adoption, and they're all getting better. 2022 is shaping up to be a fantastic year for crypto. All right, smash the like, subscribe to the channel, and I'll see you guys tonight, 8:30 p.m. Central Standard Time. All right, take care, guys. Bye.
The following is a conversation with Peter Wang, one of the most impactful leaders and developers in the Python community, former physicist, current philosopher, and someone who many people told me about and praised as a truly special mind that I absolutely should talk to. Recommendations ranging from Travis Oliphant to Eric Weinstein. So, here we are. This is the Lex Friedman Podcast. To support it, please check out our sponsors in the description. And now, here's my conversation with Peter Wang.
You're one of the most impactful humans in the Python ecosystem. So you're an engineer, leader of engineers, but you're also a philosopher. So let's talk both in this conversation about programming and philosophy. First, programming. What to you is the best, or maybe the most beautiful feature of Python? Or maybe the thing that made you fall in love or stay in love?
Python.
fuck.
Well, those are three different things. What I think is most beautiful, what made me fall in love, what made me stay in love. When I first started using it was when I was a C++ computer graphics performance nerd.
In the 90s?
In the late 90s, and that was my first job out of college. And we kept trying to do more and more like abstract and higher order programming in C++, which at the time was quite difficult. With templates, the compiler support wasn't great, etc. So when I started playing around with Python, that was my first time encountering really first-class support for types, for functions, and things like that, and it felt so incredibly expressive. So that was what kind of made me fall in love with it a little bit. And also, once you spend a lot of time in a C++ dev environment, the ability to just whip something together that basically runs and works the first time is amazing. So really productive scripting language. I mean, I knew Perl, I knew Bash, I was decent at both, but Python just made everything, it made the whole world accessible, right? I could script this and that and the other network things, you know, little hard drive utilities. I could write all of these things in the space of an afternoon. And that was really, really cool. So that's what made me fall in love.
Is there something specific you could put your finger on that you're not programming in Perl today? Like why Python for scripting?
I think there's not a specific thing as much as the design motif of both the creator of the language and the core group of people that built the standard library around him. There was a taste to it. I mean, Steve Jobs, you know, used that term somewhat arrogantly, but I think it's a real thing, that it was designed to fit. A friend of mine actually expressed this really well. He said, Python just fits in my head. And there's nothing better to say than that. Now people might argue modern Python, there's a lot more complexity, but certainly as version 1.5.2, I think was my first version, that fit in my head very easily. So that's what made me fall in love with it.
Okay, so the most beautiful feature of Python that made you stay in love. It's like over the years, what has, like, you know, you do a double take, you return to often as a thing that just brings you a smile?
I really still like the ability to play with meta classes and express higher order things when I have to create some new object model to model something, right? It's easy for me because I'm pretty expert as a Python programmer. I can easily put all sorts of lovely things together and use properties and decorators and other kinds of things and create something that feels very nice. So that to me, I would say that's tied with the NumPy and vectorization capability. I love thinking in terms of the matrices and the vectors and these kind of data structures. So those two are kind of tied.
So the elegance of the NumPy data structure, like slicing through the different multi-dimensional.
Yeah, there's just enough things there. It's like it's a very simple, comfortable tool. Just it's easy to reason about what it does when you don't stray too far.
Can you put your finger on how to design a language such that it fits in your head? Certain things like the colon or the certain notation aspects of Python that just kind of work. Is it something you have to kind of write out on paper, look, and say it's just right? Is it a taste thing, or is there a systematic process? What's your sense?
I think it's more of a taste thing, but one thing that should be said is that you have to pick your audience, right? So the better defined the user audience is, or the users are, the easier it is to build something that fits in their minds, because their needs will be more compact and coherent. It is possible to find a projection, right? A compact projection for their needs. The more diverse the user base, the harder that is.
Yeah.
And so as Python has grown in popularity, that's also naturally created more complexity as people try to design any given thing. There will be multiple valid opinions about a particular design approach. And so I do think that's the downside of popularity. It's almost an intrinsic aspect of the complexity.
Well, at the very beginning,
Run, little lady, run!
Aren't all the greatest projects in history were just solving a problem that you yourself had?
Well, so Clay Shirky, in his book on crowdsourcing, or his kind of thoughts on crowdsourcing, he identifies the first step of crowdsourcing is me-first collaboration. You first have to make something that works well for yourself.
Fuck that, follow me.
It's very telling that when you look at all of the impactful big projects, well, they're fundamental projects now in the Sci-Fi and PyData ecosystem, they all started with the people in the domain trying to scratch their own itch. And the whole idea of scratching your own itch is something that the open source or the free software world has known for a long time. But in the scientific computing areas, these are assistant professors or electrical engineering grad students. They didn't have really a lot of programming skill necessarily, but Python was just good enough for them to put something together that fit in their domain, right? So it's almost like it's a necessity is the mother of invention aspect, and also it was a really harsh filter for utility and compactness and expressiveness. Like, it was too hard to use, then they wouldn't have built it because there was just too much trouble, right? It was a side project for them.
And also necessity creates a kind of deadline. It seems like a lot of these projects are quickly thrown together in the first step, and that, even though it's flawed, that just seems to work well for software projects.
Well, it does work well for software projects in general, and in this particular space, one of my colleagues, Stan Siebert, identified this, that all the projects in the Sci-Fi ecosystem, if we just rattle them off, there's NumPy, there's Sci-Fi, built by different collaborations of people, although Travis is the heart of both of them. But NumPy coming from Numeric and NumRay, these are different people. And then you've got Pandas, you've got Jupyter, or IPython, there's Matplotlib, there's just so many others that I'm not going to do justice if I try to name them all. But all of them are actually different people. And as they rolled out their projects, the fact that they had limited resources meant that they were humble about scope. A great famous hacker, Jamie Zawiski, once said that every geek's dream is to build the ultimate middleware, right? And the thing is, with these scientists turned programmers, they had no such dream. They were just trying to write something that was a little bit better for what they needed in MATLAB, and they were going to leverage what everyone else had built. So naturally, almost in kind of this annealing process or whatever, we built a very modular cover of the basic needs of a scientific computing library.
If you look at the whole human story, how much of a leap is it? We've developed all kinds of languages, all kinds of methodologies for communication. It just kind of like grew this collective intelligence. Civilization grew, it expanded, wrote a bunch of books, and now we tweet. How big of a leap is programming if programming is yet another language? Is it just a nice little trick that's temporary in our human history, or is it like a big leap in the almost us becoming
what the
another
fuck are you
organism
doing?
at a higher level of abstraction, something else?
I think the act of programming or using grammatical constructions of some underlying primitives, that is something that humans do learn, but every human learns this. Anyone who can speak learns how to do this. What makes programming different has been that up to this point, when we try to give instructions to computing systems, all of our computers, well, actually this is not quite true, but I'll first say it and then I'll tell you why it's not true. But for the most part, we can think of computers as being these iterated systems. So when we program, we're giving very precise instructions to iterated systems that then run at incomprehensible speed and run those instructions. In my experience, some people are just better equipped to model systematic iterated systems, iterated systems in their head. Some people are really good at that and other people are not. And so when you have, like, for instance, sometimes people have tried to build systems that make programming easier by making it visual, drag and drop. And the issue is you can have a drag and drop thing, but once you start having to iterate the system with conditional logic, handling case statements and branch statements and all these other things, the visual drag and drop part doesn't save you anything. You still have to reason about this giant iterated system with all these different conditions around it. That's the hard part, right? So handling iterated logic, that's the hard part. The languages we use then emerge to give us ability and capability over these things. Now, the one exception to this rule, of course, is the most popular programming system in the world, which is Excel, which is a data flow and a data-driven, immediate mode, kind of data transformation-oriented programming system. And it's actually not an accident that that system is the most popular programming system, because it's so accessible to a much broader group of people. I do think as we build future computing systems, you're actually already seeing this a little bit. It's much more about composition of modular blocks. They themselves actually maintain all their internal state, and the interfaces between them are well-defined data schemas. And so to stitch these things together using like IFTTT or Zapier or any of these kind of, I would say compositional scripting kinds of things, HyperCard was also a little bit in this vein. That's much more accessible to most people. It's really that implicit state that's so hard for people to track.
Yeah, okay, so that's modular stuff, but there's also an aspect where you're standing on the shoulders of giants. So you're building like higher and higher levels of abstraction. But you do that a little bit with language. So with language, you develop sort of ideas, philosophies, Plato, and so on. And then you kind of leverage those philosophies as you try to have deeper and deeper conversations. But with programming, it seems like you can build much more complicated systems. Like without knowing how everything works, you can build on top of the work of others. And it seems like you're developing more and more sophisticated expressions, ability to express ideas in a computational space.
I think it's worth pondering the difference here between complexity and complication.
Sure.
Okay, right?
Back to Excel.
Well, not quite back to Excel, but the idea is, when we have a human conversation, all languages for humans emerged to support human relational communications, which is that the person we're communicating with is a person, and they would communicate back to us. And so we sort of hit a resonance point, right, when we actually agree on some concepts. So there's a messiness to it, and there's a fluidity to it. With computing systems, when we express something to the computer and it's wrong, we just try again. So we can basically live many virtual worlds of having failed at expressing ourselves to the computer until the one time we expressed ourselves right. Then we kind of put it in production and then discover that it's still wrong, a few days down the road. So I think the sophistication of the things that we build with computing, one has to really pay attention to the difference between when an end user is expressing something onto a system that exists versus when they're extending the system to increase the system's capability for someone else to then interface with. And we happen to use the same language for both of those things in most cases, but it doesn't have to be that, and Excel is actually a great example of this, of kind of a counterpoint.
Okay, so what about the idea of, you said messiness.
Mm-hmm.
Wouldn't you put this software 2.0 idea, this idea of machine learning, into the further and further steps into the world of messiness? The same kind of beautiful messiness of human communication. Isn't that what machine learning is building on levels of abstraction that don't have messiness in them, that at the operating system level, then there's Python and programming languages that have more and more power, but then finally there's neural networks that are ultimately data, and so the programming is almost in the space of data, and data is allowed to be messy. Isn't that a kind of a program? So the idea of software 2.0 is a lot of the programming happens in the space of data. So back to Excel. All roads lead back to Excel. In the space of data, and also the hyperparameters of neural networks, and all of those allow the same kind of messiness of human communication.
You fast as fuck, boy.
It does, but I took like 2 CS courses in college, so I don't have. Now I did cram a bunch of CS in prep when I applied for grad school, but still, I don't have a formal background in computer science. But what I have observed in studying programming languages and programming systems and things like that is that there seems to be this triangle. It's one of these beautiful little iron triangles that you find in life sometimes. And it's the connection between the code correctness and kind of expressiveness of code, the semantics of the data, and then the kind of correctness or parameters of the underlying hardware compute system. So there's the algorithms that you want to apply. There's what the bits that are stored on whatever media actually represent, so the semantics of the data, within the representation, and then there's what the computer can actually do. And every programming system, every information system, ultimately finds some spot in the middle of this little triangle. Sometimes some systems collapse them into just one edge.
Are we including humans as a system in this?
No, I'm just thinking about computing. Okay, and the reason I bring this up is because I believe there's no free lunch around this stuff. So if we build machine learning systems to sort of write the correct code that is at a certain level of performance, so it'll sort of select, right, with hyperparameters, we can tune kind of how we want the performance boundary in SLA to look like for transforming some set of inputs into certain kinds of outputs. That training process itself is intrinsically sensitive to the kinds of inputs you put into it. It's quite sensitive to the boundary conditions of the performance. So I think even as we move to using automated systems to build this transformation, as opposed to humans explicitly from a top-down perspective, figuring out, well, this schema and this database and these columns get selected for this algorithm. Here we'll put a Fibonacci heap for some other thing. Human design or computer design. Ultimately, the boundaries that we hit with these information systems is when the representation of the data hits the real world is where there's a lot of slop and a lot of interpretation. And that's where actually I think a lot of the work will go in the future, is actually understanding kind of how to better, in the view of these live data systems, how to better encode the semantics of the world for those things. It'll be less about the details of how we write a particular SQL query.
Okay, but given the semantics of the real world and the messiness of that, what does the word correctness mean when you're talking about code?
There's a lot of dimensions to correctness. Historically, and this is one of the reasons I say that we're coming to the end of the era of software, because for the last 40 years or so, software correctness was really defined about functional correctness. I write a function, it's got some inputs, does it produce the right outputs? If so, then I can turn it on, hook it up to the live database, and it goes. And more now we have, in fact, I think the
On the prior video from yesterday, we prepared many bounce targets for today's pullback, of which I would like to follow up on now and what to expect next. With that said, welcome back to Elio Trade's channel. I'm your host, Crown, again today, and a little bit of follow-up TA, as I want to reiterate the purpose of these videos. Of course, I'm not a financial advisor. This is not financial advice, but I'd like to follow up on the sort of analysis from yesterday as we are getting those first initial major bounces, and I want to talk about, what to expect next and how these sort of things typically work out in my experience. With that in mind, I always want to reiterate that, hey, when we're talking about trading, when we're talking about technical analysis, we are always not talking in absolutes. That cannot be done. There is no, I called it, there is no, I'm the winner or anything like that. It is only statistics, if I can say that properly, and probabilities. And that is essentially what we're doing here. We're looking for those high probability plays that can produce tradable bounces, theoretically tradable bounces, that is, and sometimes they might even turn into reversals. So today we'll follow up on that, but first things first, I wanted to bring you towards the chart of the day, something a little bit interesting over here out of left field. And this is the next rendition of my own app, which by the way is 100% free. You can find it for yourself at app.crowntrading.net. And I wanted to show off the open interest chart right here, which represents the amount of contracts open for leveraged positions. And what happened in the last, I guess going back to the 27th of December, where Bitcoin hit the $52,000 range highs, which we said was likely to pull back from, you can see that open interest was actually coming up into that region, meaning that people were putting on more and more leveraged positions, likely leveraged long positions. And as you can see over here, ever since $52,000 was rejected, those positions have been steadily coming off, and now we have seen almost about $1.5 billion coming out from the top at that $52,000 region, now down to our $46,500 low. And you can see that many positions coming off with that does suggest that the market is somewhat resetting. But in the grand scheme of things, if we go here to the daily, you'll notice that this can still come down significantly lower. So I would like to once again set the tone for today's analysis in the sense of, we're not talking about, macro reversals here. We are simply talking about potential bounce areas and what the sort of next move on that looks like. So let's go on to Bitcoin over here. I want to follow up on yesterday's analysis. We did hit our blue box targeted region on the more conservative area for a little bit of a bouncy bounce. And now comes the fun game of, well, where do we find the high of this next rally? Of course, if I go over here, or actually we could just work off this chart right here. In fact, I'm going to get rid of this because it's not relevant towards the analysis, nor is this. Get out of there. Stop that. And basically, Bitcoin on the daily is within a range. That range being $46,000 low versus $52,000 high. What happens when you hit the top side of the range, as we spoke about just a few days ago, likely to pull back. Just like when you get to the bottom side of the range, likely to bounce up. And that's kind of where we're at right now. So again, I want to be very deliberately clear that I'm not saying that anyone who perhaps might have taken a theoretical position in this region right here is, bound to go just straight to the moon exactly from this point. We never see any ebbs and flows from now. No, of course not. of course, this is a highly volatile asset, and, you know, few percentage moves either which way are highly likely. But where is the next sort of area to be aware of for a bit of a, well, in this case, you know, I guess an easy way to be perhaps even taking profit on some of those bounce plays? Well, the first and obvious one is yesterday's breakdown region, which was where? Which was just around the low $48,000-ish region. Now keep in mind, if you are looking for the greater reversal play, what would essentially confirm that? Well, it's certainly not going to be today. What this would likely look like, if I get up my little brush over here, is you'd see Bitcoin close somewhere around this white 200 simple moving average, which is 47,000 and 47,800, let's say, and then over the next 48 hours, essentially before the Friday closure, we'd really want to see Bitcoin close back above this area right here, that $49,000 region or so. Why is that? Because that is your former breakdown region from your topside rejection on this essential channel. Anyways, that's getting a little bit ahead of ourselves right now. So again, understand what you're likely doing. Understand that being more aggressive with, or maybe not aggressive is the right word, but greedy with taking profits can obviously lead towards, well, you know, losing out on those profits altogether. Which is why personally, if I was taking this theoretical position over here, I'd be very quick to be letting go at least some on this first move up, of which we've already had a more than $1,000 move up from that point. You know, there's no harm in realizing at least some, so that even if you do come back down, well, you're still probably in the green, and you can have a stop loss at break even on the wick low, essentially. And what the next move very likely looks like, if we do close today above, let's say, 47,800 on the daily, then I would be looking for tomorrow to very likely try up somewhere in between to upper 48,
Really
and then we
fucking
come back to it after
chasing me
that
now, aren't
and
you?
see if that position is potentially still worth holding. And that's how you can kind of manage these things going onwards and forwards from here. And again, obvious risk management on something like this is just going to be that last wick low right here. When you see something like that, it is actually rather important to kind of mark off. Let's move on to Ethereum. So Ethereum yesterday, we marked off this area as a potential bouncy region. We actually wicked a little bit below there. That's okay. We do operate off of closures in this case. They come all the way down to the bottom end of it, more importantly at 3730, which is okay. Now looking for that bounce, probably somewhere around the median of this range and the mid 3800-ish region. Currently trading at 3788. Again, what essentially invalidates this and implies that this thing's gonna not just move to the downside, but move significantly to the downside, be with any sort of an hourly closure below your current wick low at, what is it exactly, just below 3,700, and implying moves back down, you know, at minimum to 36 and probably even lower than that over time, to be honest with you. It would look not good, we'll say. Okay, and until then, you know, similar to Bitcoin, this one, however, not as strong. And similar to Bitcoin at $52,000, I cannot be excited for any sort of a macro reversal here on Ethereum as long as you are below 4130, our same area that we've had marked off here for weeks on end now, still yet to be overtaken. Short term, however, bounces up to mid 38s is completely fine. And then again, same sort of thing as Bitcoin goes. I don't see any reason to be super greedy with taking profits. Instead, take at least a little bit early and often. It'll make you feel better. It'll realize some in your pocket, and if your risk management does get hit, assuming that you do have one in a relevant place, in this case you already know where I'm thinking, then, well, at least you ended up on in the green on the trade, or at least break even. Okay, moving on to symbol Link. Let's go to Link over here. Link came down to our I had this 1990-ish area marked off right here. We came all the way down to 1960 on that wick low. Again, close enough is close enough in this case. That does offer a bit of an edge at that 1960-ish region, meaning that any sort of an hourly closure below there. And I do look for this one to shatter the bed all the way back down to your prior range lows in the low $18-ish region. Until then, short term, very likely does try for some upside from here. Anywhere around 21 to 21.5 is fair game. However, things don't really turn around long term, in the same case as before, as long as we're below about 23.36. So again, I don't think that this is the time to be greedy. Yes, things can definitely reverse from here, but when it's times like this, I found it's always better to be conservative and be a little bit more aggressive with taking profits. Cardano, the Cardurpio, my favorite one over here, the best one to be sane. And this one actually hit perfectly into our 133-ish region, the top out of that blue box. Didn't get all the way down there, to be fair. And same thing on this one as the other ones. Long term, can't get too excited about it as long as we're below 158 or so. Short term, risk management below our current wick low is completely fine, and targets back up towards the mid 140s is completely fine for the short term. But these are just balance plays. We are not talking about reversals again until it comes back above this prior local high, rejected local high. And hey, if you do lose the 133 low, well, back down to the crypto hell, I guess, in the 120 to 1.25 region. Moving on to Terra Luna. This one very interesting as well. Very strong here. Very, very strong here, actually. So it did come down to our $84-ish region. You can understand this one is relatively strong simply because of the fact that it didn't correct as much as a lot of the other names that we've looked at today. Now, I do still think that this one can very easily come back down to, the mid or even low $70 region. It's still, however, one of the best long term. So with that in mind, what would I essentially be using as a risk management in this case? What would be relevant? I suppose you could use this current wick low on the full hour at about 82.5 bucks. You see some good volume on right there, so technically speaking, it should be a decent pivot theoretically. Although, forgive me for this is just a really, really strong chart right here, which means that I should be more lenient on it. But I do think that this one does take a little bit of time reaccumulating at the highs here before trying again. However, short term, does it try and move back up towards the low 90s? Perhaps yes. The thing is that's a terrible alliteration right there. The thing is that I would still be on guard that this one could very easily come down to the mid 70s, and that really wouldn't do too much. I mean, hell, this thing could come down all the way to like $69 and still be completely good on a higher low schedule right here. So I'd be cognizant of the 84-ish region. Yes, we are getting a bounce from there right now. Do I feel super confident about it? No, I do not. Namely because of the many drives of bearish divergence that are forming here on your medium and lower time frames as well. So I would be a little more cautious on it, especially as long as you're below the mid 95 region. Okay, cool. Did I miss one over here? Oh yeah, we had symbol DOT to look at as well. This one hit perfectly actually into the top side of our blue box here as well. Again, getting the first bounce off that. So the first bounce target should have been the 200 simple. We actually might have already hit that at $29. Yeah, almost right there as well. So 28.55. Again, same sort of logic here applies as the other ones. If you do come back down and take out that last $27 wick to the downside low, I am looking for this one to really shatter the bed back down somewhere around 24.5 to 25. Until then, bounces on right here. Kind of already played out the easy portion of that. I suppose next move would be around 29 to 29.5. Same thing as all the other ones though, as long as we are below the range highs, which in this case is 31.5, can't really be, looking for any sort of macro reversal in this case, just looking for, of course, tradable bounces, of which now you've kind of seen these happen in the last 24 hours. I hope that this was in some way valuable. I forgot to let you know that I have my own channel, by the way, as well, where we do Bitcoin analysis each and every day. If you think that might be useful in your life, well, you can find a link in the description below. And again, let me know what you think of these videos. Any sort of constructive criticism is cool, is good to go. Other than that, you might even consider liking the video if you find it in some way, well, useful, hopefully. All right, with that said, take care. I'll see you in the next one.
To buy. It's basic minimal supply. And in fact, it was deflationary. And I've been modeling deflationary Bitcoin for the longest time. And I said, wow, this thing's going to pop one day. Once people catch on. And I didn't really believe it had such a future up until I saw the basic money printing out in April 2020. So what were you doing at that time? Were you sitting in a chair saying, I can't believe this? Or
Well, a couple of things. So first of all, I have a young daughter, and so when the pandemic started to really take hold, or at least what we thought at the time, it seemed like the world essentially on the edge of something really dark. So I was actually initially very shaken in my Bitcoin thesis, not because I was worried about Bitcoin at all, but I thought the world was worried about what was coming. So I thought Bitcoin was going to potentially go into the back of people's lives. seeing the expansionary response, I'm like, oh my god, this is the big one, right? And then that's when I started putting out some analysis, because Bitcoin is supported to these 4-year halving cycles. Price tends to peak roughly 510 days on average after each halving. And I started to chart out the next anticipated peak, which is actually right around now, for 2021, and mapping that onto the expected inflationary pressures from US dollar inflation, which is also right around now. It takes about 18 months for these things to wash through the system. That's when I had to revisit my original price projection for this cycle and augment it upwards. And yeah, it's for someone who has been barking up this tree for a long time. I've been saying that the state money doesn't work, and it inevitably collapses. And it collapses catastrophically, typically, as inflation is. This entire event has still seemed sudden. It's amazing how quickly things have moved. So I can only imagine all the people that don't know people.
That's funny because I was there. I spent a lot of my time over 2020. Anybody who met me said, "Oh no, this must be totally free." And all I want to do is get my friends and families. Buy one per child. Just let's put it away. Just forget about it. Wait 10 years. That was my whole kind of pitch, and I was very unsuccessful. So I put a video together. But when I saw April 2020 happening, the March and the lockdowns, and I saw the money printing, and I was very familiar with the halving cycle, I said, this is a perfect storm. And that's when I anticipated about 18 months before that sent up a financial crisis. I believe in 7 to 9 year cycles. And we were like in 10 years of expansion. I said, something's got to give here. I was expecting something completely different, but I was in a heavy cash position when it did hit. So I was fortunate to get into everything that was in the week.
This is GG's, everybody.
I was actually physically doing a job and walked to my office door. I was just buying call options. So
Thank God.
it was crazy. It was just
Let's go.
a very
Let's
weird
go.
time. But anyway, so that's awesome. So congratulations on your daughter. That's super exciting. And that brings me to triggers another question in my mind is how would you explain Bitcoin to a 10-year-old or a charting user in 160 characters or less?
That is a great question. Maybe the simplest way this most poignant, at least, is that it's incorruptible money. Right? Throughout all human history, we have been creating these social institutions or these symbolic canopies under which we organize ourselves. Whether this is religion, a nation state, human rights, any
Definitely would have had
this,
no
this
ad.
gets to Yuval Harari's
Nice.
Sapiens, who talks about imagined morons. The distinct evolutionary advantage that humans have over all other animals, that we can organize ourselves flexibly in large numbers. And it's done through this ability to tell and believe stories. The problem has been, with every great civilization, is that we end up corrupting the money. Those that get into a position of power forcefully monopolize the money. They then debase it to their own benefit until the trust is diluted sufficiently within civilization that it collapses. And this is very obvious if you consider what's going on in Venezuela today. Like, people are like, what do you mean trust and moneyless relationships? Like, when you hyperinflate the currency, it loses all meaning, right? That the money loses its ability to enable social cohesion. So in Venezuela today, there's cash clogging the gutters in the streets, and people are starving, people are eating cats and dogs. Like, it's very barbaric. So there's this direct correlation between the integrity of the money supply and the integrity of a civilization. You cannot have one without the other. And another way to think about this is property rights. Right? Money is the most important property right, and if you debase that, then you're debasing the foundation of civilization. Like, people cannot trade and cooperate at scale, therefore they're forced into these barbaric means of survival. The problem across all human history is that whoever gets in power gives into the temptation to debase and corrupt the money supply, which implodes the civilization.
The fall of the Roman Empire. Going all the way
Yes.
back.
and I realize now that I'm not at all giving you a good, simple Charlie Munger or 10-year-old answer. But I think that's the way you have to think about it, is you need, in the same way we have standard weights and measurements for every other unit, right? The kilogram, the meter. If these things fluctuated arbitrarily, like depending on what jurisdiction you're operating in, like if the king gets to say the meter is longer or shorter, how could we ever have coordination at scale? We could never have a global division of labor.
Planes
So
would
that's
fall out
what-
of the sky.
Exactly. So the whole machinery is immutable standards. But the one place we've never had an immutable standard is money. So maybe that's the short simplest answer. Is you could think of Bitcoin as the metric system of money, something like that.
Yeah. I like to use the word trustless as well. I did an interview with this group that helps people that were human trafficked to give them hope. And I always say Bitcoin is hope because but how people who've been betrayed in the worst possible form, they need something trustless that they can trust, if that makes sense.
Yeah.
And that's kind of how I position. I like that word, it's the trustless form of money.
Yeah, and people get confused by that because people think trust is a good thing. You need trust. But it's actually back in Szabo's work, he talks about money as an instrument of trust minimized change. Right? If you and I, we don't know each other. I don't know your reputation, your background. We can still do business together if I transfer you Bitcoin or transfer you gold. That's a trust minimized means of interoperating. You don't need to know me or my reputation or my background if I'm providing you money. The problem with fiat currency is that you're always forced to trust the issuer. Right? When you trust they won't debase the money, they won't enforce capital controls, they won't deauthorize the money. Like you see the 500 rupee banknote in India turned off overnight. I mean, this is not trust minimum. So therefore, it doesn't hold as money. That's why it's
You've triggered another question in my mind, and it ties back to what you're talking about, and it's something that I have a hard time understanding is why are, and it ties in exactly what we're talking about, why are non-believers, people out there that are just violently opposed to Bitcoin, even though they now kind of realize how important it is?
No.
Is that a personal, or is it just stubbornness, or is it just people hold on to whatever scruples they believe they have?
Never underestimate Mama Nerds.
propagates so quickly through the human mind, or collective human mind. I think that
No, Leon, no, go for the sun.
I would take it a step further and say that it's almost as if we only have approximation of money up until the invention. And I can explain this through the Austrian language. So we look at gold, roughly 2 trillion of that market cap is the result of demand for gold as an industrial metal. The other 8 trillion of the market cap is reservation for its use as money. So the market cap of any asset is split between its utility value or industrial value and its marketability or exchange value, monetary value. Every asset first of all exhibits some monetary premium typically. Like if someone's holding it not to use it for participation or trading, that would be monetary premium. Gold is just the asset that has the greatest monetary premium historically. That's why it's money. Bitcoin is the first monetary technology that is pure monetary premium. Right? It has no industrial use whatsoever. So it's like the invention of money in a lot of ways. We thought gold was money, and gold has been money, but it was like, today, again, it's 80% money. 80% money, 20% industrial metal. So I think that maybe we are a bit more bullish on our own civilization. We think we're really modern and sophisticated and civilized, but I think we've just now discovered this incorruptible base layer that lets us scaffold ourselves to what civilization really can be. Right? We're getting closer toward laissez-faire, libertarian view of the world. That if we have less coercion, we have more development. just has not been possible historically because of the incentives. You know, gold was a rough analog approximation of this, but we figured out a way to corrupt that too. Right? We figured a way to corner the market on gold. We figured a way to manipulate it to sever the population's access to gold. Right? We kind of impose this. The currency is introduced as a convenience mechanism for gold initially to make it more affordable, but then again, the issuer or the custodian of the gold, today's central bank, has every incentive to hoard that gold and sever access to it for everyone else. So human beings are, I'll use the word sinful, you could say self-interested as well, and we need these protocols that protect the collective interest from individuals establishing a predator and prey relationship. You could get on the other side of the central bank and become a central bank shareholder. You have every incentive to do that because you now have a perpetual profit. You needed to have some pure money that couldn't be corrupted and this predator prey dynamic of species so that we can focus all of our efforts.
Let's take this
Yeah, right.
I know the direction we're a little bit off the reservation here. I hope that's okay. But with regards to philosophy and macro, how do you view how the central banks are operating? Central banks who CBDC.
They're all up
It
there.
seems like this arms race tyrannical control this is
We're
going to
fucked.
be possible. Started with China, will be followed by everybody else. But first of all, do you believe it is like
Wow.
tyranny arms race? The second of all, do you think it's going to impact Bitcoin's
Come on, you three. You really all have to go up there to get. Nobody's gonna come and get me too. That's the thing. Yeah, come get me, bro. Cause nobody's gonna get me. Nope. No. Nobody's gonna come and get me. That's crazy.
Fiat currency itself is
Geniuses, dude.
this effort to have a CBDC will just give central banks more transparency over, frankly, their, I would say over citizens, but in the sense of fiat currency, you're not technically a citizen. You're more like a serf because you're forced to use a certain money. They're able to depreciate it at will. All of the costs of that depreciation are forcibly externalized onto you. So another way to think about this, if your tax rate, your effective tax rate as a citizen, right, if it's 100%, you're not a citizen, you're a slave. Right? All the fruits of your labor go to the authority, whatever the authority is. Tax rate is 0%, you are a self-sovereign human. You're completely free of coercion. Right? Anywhere you are on that continuum, you're somewhere between self-sovereign citizen and slave. And inflation is just taxation. Right? So inflation's been this toggle closer to slavery and away from self-sovereign citizenry. And I think the CBDC would just be the most direct means of ever accomplishing that. And it gets a little more dystopian when you look at what they're doing in China, where they're tying this whole thing together with a social credit scoring system, putting it on a mobile app, controlling what you can buy, when you can buy it. If you say the wrong things, they'll turn off your money for certain types of purchases, travel,
they block you from going on race?
that's right. They'll block your internet access, they'll block your media access, they do public shaming on billboards. You don't say the right thing, and they'll shame you on billboard, and if you're a good peon for the state, then maybe they'll glorify you on a billboard. So this whole thing gets very
Orwellian.
And you know the problem here is that, and this I think this is the big transformation of consciousness actually, is that the state views people someone as memes, they're going to immediately have a distinct negative response to you treating them that way. You say, you're just this, or you're just that, and you don't treat them as a self-directed, autopoetic individual, right? You understand that we have choice and consciousness, then that relationship's going to deteriorate very quickly. Well, that is exactly what the state treats all human beings as a means to an end, their end being transition.
That is both fascinating and alarming. And I know when people see this, their whole perspective will shift as to where they are on that exact continuum. So let's switch gears. There's a lot of material. Do you believe, we'll put off the CBDC stuff for a second, do you believe Bitcoin is a potential rival?
I believe in free market competition.
Welcome to Digital Asset News. Take a top stories in crypto and bring out a bite-sized pieces. Today, just the thumbnail suggests, is retail in control or is it really institutional investors? We're going to take a look at data that should suggest that institutions are really running everything. So what we're going to do is a little bit something different. We're going to take a look at what's going on now. We're going to talk about a little wealth preservation because it's not how much you make, it's how much you keep. And finally, we're going to take a look at the future. So we'll take a look at a little bit of blue chips, what's going on with the crypto blue chip, and then what's going on into the future. So the first things first, let's just talk about what's going on in the market. Again, we're looking at December 28th, 29th. Wow, time is flowing by so fast. And again, another day where we're just kind of bobbing up and down. Market cap is 2.24 trillion, and we're down almost a point. So, hey, it is what it is, and you really can't take that into or overlook what's going on. And the big thing is, the idea here is that people they're selling off and they're doing everything for taxes, and then also institutions are locking in their profits, because hedge funds, they want to show that they are in profit and that they're up 700% of whatever they're doing. Sure, great. Maybe that's it, and maybe that's not. The big thing is that in this channel we talk a lot about just holding strong and just seeing where things go. But the big thing is investing into projects that actually can weather the test of time, and the ones that have so far are these two ones right here. Bitcoin and Ethereum looking pretty darn good. We're at negative 0.31% actually, down below 50. Ethereum is 3,700. Binance Coin, everything's down across the board. Let's just call it what it is. And even the top 10, 15, 16, Uniswap's the only one that's up pretty big over the 7 days, 16%. 8% for Algorand, that's in the 19th. Good for you Algorand holders. And then Near Protocol up 8% in 24 hours. That's pretty good for a pretty bad day. So that's what's going on in the market. We're just moving either sideways or slowly going down. A couple of projects are turning a profit, but not many. Then we take a look at some on-chain analysis, like we always do. I don't really, you've already heard about this, all miners outflow. We can actually see here, if we're taking a look at miners that are actually selling right now, we can see that if we break this down by day, and then let's just do day, not hour. But you can see there's a little bit of an uptick of miners selling as far as like 27 December. So there's people that are taking profits, and they got to take profits because, like we talked about, as far as like taxes, perhaps. Also, exchange reserves, Bitcoin's being taken off, but looks like there's a little bit, some that are being put back on, which would make sense because some people are selling. All exchange reserves for Ethereum, a little bit uptick. And I don't really care so much about that. What I care about is this. And I keep harping on this, because I really do think it's a powder keg, and it could blow up at any time. This is the all exchange estimated leverage ratio. And what this is all exchange open interest divided by their Bitcoin reserve. So anything over 0.2 is super ridiculous high. And right now we're looking at a all-time high of 0.216. Now, does that mean everything's going to collapse and everything else? No, it just means that those leverage plays could sink a lot of traders. And that's what's going on as far as on-chain analysis. Now, let's just dig into this little metric, which talks about our institutions running the show. And this was a really good one. I found this on Twitter. This is from Will Clemente. You've probably seen him on Pomp's podcast. Really smart guy. And he just says like this: look, if we're going to take a look at what's going on as far as retail versus institutions, there hasn't been much going on for retail since spring. And what he's talking about here, let me load this up so we can see it. Actually, lift it up so you can see it. So this is from Glassnode. And what this is total transaction fees. So when we have total transaction fees, and they are, because every single person that transacts with Bitcoin, if they're doing just a little bit, there's probably a lot of fees going on because there's small people, or individuals like me and you, let's call a spade, moving Bitcoin around a little bit. But the whales don't have to pay so much because they're moving, millions, 100 million around at one instance. So it's not like they have to pay for all these little transactions. Just one transaction to move 100 million. That's why around April or so, it's going to die off because all the whales are like, okay, well, I'll move it here, I'll move it there, but I'm not moving $100 worth of Bitcoin that I got from a referral bonus. I'm moving 250 million from this big interest play that I got, and that's all I have to do. So we can see here that, okay, as far as transaction fees, but maybe it's not that. Maybe I'm moving Bitcoin. We'll take a look at this. So there's two more, and then we'll get to the big guys. Total transfer volume breakdown by size. And we can see here in the pink, this is a volume of 0 to 1,000. And this black line right here is the price of Bitcoin. Looking pretty good. But unfortunately, from volume of 0 to 1,000, we can see a big drop off. People aren't really buying too much here from between 0 and 1,000. What about like something a little bit higher? How about 1,000 to 10,000? Well, a little bit more happened back here, but it still dropped off. Well, what about this big guy, a volume 10 million plus? And we can see back here, not too much, then a big tidal wave, and it dropped off as everybody started to sell off and everything else in April or so. And now it is picking back up exponentially. So if we can take a look at this, we can say that, yeah, maybe these institutional investors really are running the show right now. But I have to tell you, it doesn't matter in the long run. If you're into a project, like I'm not talking about the projects who are like 500, 600, 7,000 in the market cap realm. If you're in some of the blue chips, and it's a pretty good project, you feel like it's a pretty good project, you're investing into it, sure, why don't you just stay the course? Now, not all things are going to do really well. Some are actually going to die off. That's just the way it is. But for me, I just think it kind of looks like this. This is the plan. The plan in 2022, the same almost as in 2021. I'm going to, the majority is just to hold on for these different positions, but I'm going to reveal the ones I'm going to get rid of and just consolidate because it is about that time. But I'm going to keep doing on that dollar cost average in, dollar cost average out, have my exit strategy, and keep going. BTD is buy the dip, and of course, HODL for the long term because that is where most of the wealth is made. Now, I'm also going to trade a little bit. That's like 3%, and I'm going to gamble a little bit, and that's for like some metaverse plays because those are long-term plays. Those aren't like get rich quick tomorrow or a month or even a year. That's a 1, 2, 3, 4, 5 plus year play, the metaverse. And of course, even some NFTs. So that's on the left-hand side. And there's another big thing to take into consideration, and this will lead me to my next point, which if we're talking about retail is out, move into wealth preservation. So you can see on that bottom right-hand corner where we've got wealth, and it says I Trust Capital, and there's a little house and a big M. So I Trust Capital, that stands for I Trust Capital. So look, this is what I use as far as a crypto Roth IRA. I chose a Roth IRA because it is post-tax dollars, and what that means is that I am actually paying taxes, and already the money that has gone into this IRA, I'm picking up my crypto that I want to put into this Roth IRA, and if my Bitcoin or my Ethereum or my blah 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 goes all the way up to like $1 million, guess how much I pay in taxes? 0. So that's why I have an I Trust Capital IRA. Also, there is no monthly fees. And if I want to trade within my account, it is tax-free. I have to pay for 1% for swapping a transaction, but not too shabby. So that is the first part of what I do. And then also, Masterworks. So if you are into wealth preservation, this is a great one. This is what I use right now. And the reason I'm talking about it is because I picked up a Banksy today, an art piece. And what this is you can buy fractionalized share of multi-million-dollar pieces of artwork. So what I do with this is these guys do all the hard work, and I just put my money in, and they buy these art pieces and they sell it. on time in like 2, 3, 5 years or so. But I don't care because the money that I have to stay in the bank is doing nothing for me, so I might as well put it into some other investments. I did a deep dive into iTrust, into Masterworks, and then also I did a deep dive into real estate, and you can find all three of those. There's a link in the description, looks just like this, and these are my 3 pillars of wealth preservation: Roth IRA, fractionalized share of art pieces, and real estate. I'll show you how I do it and what I'm doing. Also, for iTrust, you get a $100 sign up. For the Masterworks, you skip the wait list. And then for the real estate playlist, well, that's just free. I just show you how I do pick up real estate and how I actually purchase things, as far as with short-term rentals, VRBO, Verbo, and Airbnb. So that's what we have for that piece. And then also, there's another thing that is going to lead into moving forward, and that is follow the developers. And I saw this video, and it's starting to make, or this piece, and it's starting to make a lot more sense as I've been talking to more individuals and in the projects of the metaverse. And this makes a lot of sense now. So this is a quick snippet. It says Apple aims to prevent defections to Meta with a 180,000 bonus for top talent. And all it is, Apple Inc. has issued unusual and significant stock bonuses to some engineers looking to stave off defections to tech rivals such as Facebook, owner Meta platform. They're not just losing them there, they're also losing them into blockchain. They're also losing them into metaverse players. And again, they're doing this by issuing stock, and it's parceled out over years. But what I've seen, the people that I've been talking to for these metaverse plays, because as you know, I like real estate. I like real estate that's real, and I like real estate that is virtual. I think that is the next big play. So I've been talking to a lot of different places from people who have connected me, people who are pretty high up, honestly, and they've got some pretty good ideas. But the thing that the projects that I delve into and have invested into are the ones that have the developers, because there right now is a shortage. And I've talked to one group, they wouldn't even give me the names of the developers because they were like, look, we're not going to have them poached. Right now we've got some investments and we're not going to lose them. So when I talk about follow developers, that's where it all comes to, and actually good developers, which leads me to my next point as far as when we talk about moving forward or looking forward. We already talked about the blue chip stuff, the Bitcoins, the Ethereums, the Solanas, the Cardanos, the Avalanches, all that stuff in the top 20 or so, right? That's great. But to look forward, and these are like forwards thinking like year, 3-year, 5-year, 7-year plays. This is what I've been talking about. So the metaverse play, there was one that I did, a deep dive. It's called Gensokishi game. It's a game that's already on Android, iOS. It's already on Nintendo Switch and also on PlayStation. So they're going to move over from those platforms, free to play, to the metaverse, play to earn. I think it's going to be pretty big because they've got a lot of, well, first they have a great community and they got a lot of developers and things are really moving fast. Also, just so you know, I had to talk about this today because it'll be an IDO, initial DEX offering, and it's going to happen on January 18th, 2022. So if you would like to get into this, I can't tell you what to do. I'm just a kickstart. As far as education, you must do your own research. I'm not a financial advisor, and this is just financial opinion, not financial advice. So it might behoove you to take a look at this project. On top of the fact that if you want more information, I did a deep dive. I'll link in the description. Also link at the very end. This is on my second channel over at Digital Asset News Clips. We do just deep dives. So we're going to monetize that channel. So check that video out. On top of the fact, there's also another one. If you're big into this project called Meta Hero, which takes you and scans you and puts you into the metaverse, that one did initially, I want to say between 45 or 65x from the time from the pre-sale all the way to the launch. It's been panning out pretty strong. A little bit of dips here and there, but not too bad. So if you're familiar with Meta Hero, this should probably be on your radar. And what we're talking about here is one called Everdome. It's another metaverse play, and they are partnering up with the same developers that are working on Meta Hero, and they are some great ones, and you can find why it's so big in the deep dive that I did. This one is also coming to fruition because they just released the new section of their website. Tells you everything that they're doing as far as branding, social, buy, sell products, marketplace, how this metaverse really fits in everything. I thought this was interesting. Medicine, gaining opportunities to diagnose diseases or care medical consultations. Interesting. That's crazy. Also, they break down the tokenomics, which I think was the missing component And right now, if you have purchased the Hero token, which again did pretty darn well, or you're on the 10-set Gem Launchpad DGLP, you were already into that sale. So this one is coming out in Q1 2022. Not for sure on the exact dates, but I needed to tell you now because if it's in January, you probably should know about that. Again, this is your initial kickoff to these types of information and these types of projects. I also did a deep dive on this one. You can find that in the same place, Digital Asset News Clips. And these are looking into the future. So look, I am biased. I only talk about the things that I actually buy because I have skin in the game. I will never talk about things I'm like, that looks good, and not really put anything into it because I think that these plays will be big. I could be wrong. I've been wrong before. So it's up to you to do your own research, and that is it for today. So look, I know there's a lot of information, a lot of things going on, but I want to say if you stuck with me all the way in, thanks. I appreciate it. If you like today's video, give it a thumbs up. Also consider subscribing. A lot of things we talk about are time sensitive. And that's it for today. So thanks so much for watching. I appreciate it. And see you on the next one.
And you know it will never fly.
Well,
And,
this is great. You seem to be a little bit like me in the way I always like to put myself 10 years into the future. Sometimes I put myself too far into the future and the world isn't quite ready. But one of the things that I find very interesting is what I call trend trading, trend investing, and having your eye on the next technology that's coming. Because if you can get ahead and be right about what is going to change the world, for example, I did that with Google years and years ago. I did that with Netflix. I did that with Amazon. Did that with Tesla. When you can identify the technology that's going to really radically disrupt the world and get in early, you can make exponential returns. So when you look at technology, how do you identify mapping the trend between endpoints between, you know, wow, this is cool, but it'll really disrupt the world? And how does that weave into your whole process of thinking?
yeah, so that's very interesting. So I prepared a little presentation. Maybe I can. Is it a good time?
Yes.
Share it. Because I will try to answer exactly that. Because there is one thing that is different. There's one thing that's different between internet and telecom and now blockchain, which is the major transition that I had the fortune to be in. And that is that you couldn't invest in the TCP/IP protocol, even if you saw that this is going to be big. You couldn't invest in the oral CMAC protocol of the mobile data phones, even though that's the same protocol that's used today in 5G, like 3 generations later, even though we realized that this is world revolutionary. You couldn't invest in the protocol. You have to buy like share in some company or something. But with blockchain, you can invest in the protocol, which means that you don't even need to be an owner of or create the industry. You just need to be able to understand it and understand where it's going, and that is new. That has never, to my knowledge, that has never happened before. That is so interesting, and so we have this wonderful blend of technology and investment and technical analysis and trends and everything boiling together into this, and that's so interesting because I come from a technology side. I was not an investor for most of my life, while you have one of the most, thorough investment backgrounds. And now we come to this point where we kind of agree on a lot of things, but we're coming from two very different directions.
What's up, Future Millionaires? I'm Mike the Investor, and in today's video, we're going to talk about the Brave browser and its native token, the BAT token, also known as the Basic Attention Token. Now, if we briefly just go back a year and a half ago, I did a video on the Brave browser and why I personally switched over to it. And this was back in April 2020. Now, in this video, we're going to do an overview on the Brave browser. What is it? The BAT token. What is it? We're also going to look at the BAT token price chart, and we're also going to dive into some key factors about the project as a whole. And then after that, we're going to answer the famous question, is the BAT token a buy for 2022 and beyond? Now remember, these videos are strictly for entertainment and educational purposes only, so please do your own research before investing. Now, I do have timestamps in the description below if you are looking for a specific section in this video. But before we dive into it, take advantage of grabbing some free Bitcoin by using the Voyager and BlockFi link in the description below. But enough talking, let's jump into it. Alright, crypto investors, welcome back to the channel. Now we are on CoinGecko, and according to CoinGecko, we can see the market's down 2.9% and the market cap is 2.3 trillion. Now as we look at the basic attention token, ranked number 82 out of the top 100, and it is currently down 7.3% on today, and it is $1.20 per token. And it is an ERC20 token as well, built on the Ethereum blockchain. Now as we look at the market cap here, very close to 1.8 billion at 1.786 billion. And for the circulating supply, something I really like is